Good morning. Today is Thursday, March 23rd. The time right now in Singapore is 10:40 in the morning. Overnight on Wall Street, the biggest news to hit the market this week is actually the FOMC, which is actually conducted at 2 a.m. Local Singapore time. And the result was the Federal Reserve decided to hike interest rate by another quarter point or 25 basis point, which is very much within the market expectation after the turmoil that we have seen over the last 2 weeks as far as the banking sector is concerned. In order not to upset the cut by hiking more than a quarter point, I think the Federal Reserve right now is doing something that what is middle of the road, because market do expect on the other end of the spectrum, we expect the Federal Reserve to actually pause to even cut rates in light of the turmoil in the banking sector. But I think the Federal Reserve decides that in order to maintain its credibility, it will still have to hike. So they hike by the bare minimum, by a quarter point. So this actually initially excite the market, because the market in terms of equity markets in the States actually initially reacted to the upside. But after the Q&A session, they realized that over the longer term, the fight against inflation is going to be still central to the Federal Reserve. And then coupled with remarks by the Secretary of the Treasury, Janet Yellen, coming to say that she don't believe the United States government should guarantee all deposits in the bank. And this is exactly the golden goose of market actually came back down after consideration, and we have across the board 1.6% decline across all major equity index by the end of closing. So we can see in the Dow Jones itself, the market went up to a high of 32,762 thereabout before it came down very aggressively. Now remember yesterday's update, I do remember I did mention the target zone in which I'm looking at is 32,600, 32,800, and the market went up within this bracket of prices before it came under selling pressure. So this was no surprise. The market actually closed at the day's low. So this could set the stage for the market to actually come back down, because the rise from 31,430 is a three-wave affair, and it hit the equality point, and the market came back down so aggressively that leave the possibility of a major downside challenge of 31,429 for a real possibility. Now, if the month closed below this level of 31,429, that will set a stage for the market to continue declining all the way into April, at least into the second week of April, before we can see any hope of a revival. So do watch out for continued weakness in US equity markets. Over the S&P 500, we also have a three-wave rally short of the ideal target range of 4,060, and the market went up to a high of 4,040 before it come back down. But I actually decided, as I see the market react and couldn't go much higher, I actually went into short at a close below 4,000, and the market actually went down to 3,067. So I'm in a good position right now, and basically short, although not in the best price that I want, but it is still a good price to enter a short position. So I do expect the market to take out the 3,808 eventually over time. So I hope this thing do not have to wait too long. By next week, we should be able to see much lower prices. Okay. Over the Nasdaq, we also saw a big reversal. Now Nasdaq has been very firm relative to the other two equity index in terms of the Dow Jones and the S&P 500. But yesterday, peaked at 12,943, and the major and a week closing actually set the stage for a challenge of 12,400. If this level cannot hold, then I think the entire market may eventually follow the other two equity index all the way down to take out the year's low. Okay, so we have to continue to monitor development over the next few days into next week. Okay, into the month end basically. Okay, over in the in the Nikkei itself, Nikkei did not follow Dow Jones on the way down. In fact, it's actually open and now is rebounding. So by I do see a very distinct three-wave, although this three-wave, the second leg is a bit shorter than the first leg, so there is a possibility the market may actually edge higher, possibly marginally taking out the 27,500. So long as it stay within this bracket of prices, do not go very much beyond 27,700, I think we do have a chance for the market to unravel later on in the week. Okay. Over in Hong Kong, we also see the same thing. The market actually remains relatively stable despite the sell-off on Wall Street. So this leaves the stage for a three-wave rebound. Right now, we are could be possibly seeing a consolidation period, okay, before the market take out 19,775 to test the upper side before it come back down together with Wall Street, okay. Over in the CSI 300, we also see bullishness returning to the Chinese mainland equity market. We can see that as we are speaking right now, we are having a high for the last week itself. So we can see the high now right now is 4,025 thereabout. It has possibly more room to go up. Ideally, the market continue to edge higher into 4,100 to 4,140. I think this is where I think the serious selling order may actually re-emerge. Okay. Over in energy market, we continue to see the WTI crude oil continue to edge higher. Yesterday, we have a high of $71.27. I have yet to have an opportunity to buy. Hopefully, we will get that opportunity in the next couple of days, maybe as late as next week. So if the market can pull back to somewhere near $67 or $67.80, I think that will be a great place to look out for buying signal if it ever happen. Okay, I think we should be looking to buy energy going into the end of this month. Okay, in gold market, we have a bit of a rebound as the dollar continues to track lower. So we can see yesterday we have a gold actually rebound back to $1,979, and it may continue to edge a little bit higher, but I think the market is setting for a further decline. I do believe that we are possibly seeing a three-wave pullback from 2009, okay, all the way down to perhaps $1,900. So if this is a development, I would like to see price of the spot gold going into the bracket of 1,885 to 1,904. Okay, so between this bracket of prices, I think that will be very conducive to look for buying opportunity. However, we don't see the same thing happening in silver market. Silver market basically have a new high at $23.10, but the pullback has been very, very shallow so far. I don't think the market will come down very aggressively. At the most, I think if we can see $21.50 to $21.90, that will be about all you can do for now. But I think the market right now is all focused on gold market. Over the dollar index, you can see dollar continue to edge lower. In fact, it has come into my bracket of prices in which it become very attractive now to buy dollars based on the dollar index structure itself. Prices went up to as low as 101.67 last night, and this is within my bracket of prices which I believe buying interest may re-emerge, and that bracket is 101.23 to 101.90. So let's see whether there is any buying interest that appears from here. So far there isn't any, but we can see the prices actually respected this bracket of prices by halting at 101.67 last night. But again, this is tentative. There's no buy signal that I can see so far, so let's wait and see. Over in the currency, we can see sterling went up to a high of 123.35 last night before pulling back. As we are speaking right now, it is looking back. It looks like it is going to go up because, as I mentioned earlier on, the Bank of England is going to meet today at 8 p.m. Singapore time, and the market do expect them to hike interest rates. And this, of course, over the last couple of days, we saw the inflation situation in the UK is getting from bad to worse. Inflation appears to be rolling back. Headline inflation is back above 10%. So that will mean the BOE, which is the Bank of England, will have more job to do in terms of containing the inflation. They will have no choice but to continue to hike rates, and this is setting the stage for higher sterling based on the expectation of higher interest rate hikes by the Bank of England. We can see that euro also continued to edge higher. Yesterday we have a high of 109.13. Okay, this is despite the fact that the number that came out is actually not so ideal. The development that we say is actually not very ideal for currencies right now. But again, the market seems to be deserting dollar for now. So basically anything that is not dollar is good for the market. So speculators have been buying up any other currency other than a dollar. Okay, Aussie dollars, although have rebounded, but it remains a three-way structure now. Now, if you see this is a three-way structure, the market went marginally above my target price of 0.6740 to a high of 0.6760, and then come back down. This morning it comes back up again on the back of a stronger gold market. Okay, dollar remains depressed because the flavor of the month right now is the Japanese yen. I think I did mention in time of turmoil, investors will be looking for safe haven for FX market. The safe haven currency is either the Swiss francs or the Japanese yen. But in light of the Credit Suisse collapse, nobody wants Swiss franc for now. So the only sole beneficiary of this current market turmoil is the Japanese yen. So we can see the dollar continue to slide against the yen. That means the yen is getting stronger by the day. So right now we are getting very, very close to the low of the week. Market is hovering just above 130.70. So there's a very good likelihood that it will take out the 130.64 that we saw earlier on in the week. Okay, continue lower prices is what I think will happen. Over in dollar CAC, there is hardly any major move. Yes, market actually rebounded yesterday, then come back down again. So I'm still holding on to my short dollar Canadian. This is not working out for me because it's taking far too long to develop. I'm hoping to get out at 136. If market can go down to 136, I'm going to get out of my short position and just put my money somewhere else. But yesterday has been a very good day for me. I have pre-positioned all my orders, and most of them got triggered, except for the fact that dollar did not go up. I think the rest of the positions have been working out just fine. Okay. Even in Bitcoin, I also managed to sell the Bitcoin yesterday as the market went up to a new high for the year at 28,936, and the market came back down in a big way because all this is part of a profit taking, which I think the market may eventually slide all the way to 24,000. So I hope that this trade that I have on the short side of the market can take me down to 24,000 for me to get out, and then I will watch for development within this bracket of 23 to 24,000 to see if it warrants a position to go long. Okay. Over in Ethereum, there's no new high traded. The market actually pulls back in a three wave down to 1,715, and that is where the market also has some kind of technical support here. I was expecting support to come in between $1,690 to $1,719. So it came in within this bracket of prices, so it is within expectation. But however, I have no position in Ethereum. Earlier on, I took a massive loss on Ethereum because everything was wrong about my original short position. So though I hope I can make back that money from the Bitcoin short that I took out last night. So in the meantime, do watch out for two other central banks' interest rate decision. We have the Bank of England coming in at 8 p.m. And then we have the Swiss National Bank coming in the afternoon. Not sure about that timing, but do watch out for them. Although it's unlikely to impact the currency markets. But these are the two main events for the day itself. In the meantime, do take care, and I will update you tomorrow. Bye-bye.